when you're starting a business, people always tell you to project your income.
Yeah.
Why is pro forma income statements important?
So that's probably one of the most important things you have to do before starting a business, because when you project out your income, you see all the non-financial metrics that you need to hit. So then when you walk down the pro forma income statement, you can see what are my expenses going to be, how many employees do I need, how much traffic am I expecting, and then you can actually predict whether or not you're going to be profitable. So during the course of the first year, the first 2 years of your business, you can see if you're hitting those metrics, if you're selling the right number of products, if you're keeping your cost in line, whether or not you should move locations or you should make improvements. So pro forma is probably the first financial statement that you need to make before even considering about opening a business.
You often hear about businesses needing a cash flow statement. What exactly is that?
So a cash flow statement is probably one of the most underrated financial statements. Everyone wants to see the P&L, they want to see the profit and loss and say, how much money did I make? But the cash flow statement is great because you can actually see where your cash went, your ins and your outs. So what I hear from a lot of clients is we'll tell them they owe X amount of money, they made this much profit, and they say, that's impossible, I only have X amount of money in the bank. And then we can show them through a cash flow statement, we can say, this is your top line, this is what you brought in through revenue, this is what you paid out through expenses, and then these are your debt payments, these are distributions you made, and we can break down exactly where the cash went.
In terms of business, you hear about the balance sheet. Could you explain what that means?
So a balance sheet is pretty much, it lays out all your assets, your liabilities, and your equity. Where you have your assets on one side, then you have your liabilities, then you have your equity. So when you add all those together, it should net out. And if you think about it as you have your assets, how do you pay for those assets? So one way you can get the assets is you borrow money. So if you want to buy a vehicle, you want to buy a piece of property, you either have a loan or you can put your own money into it, which is the equity. And then as you progress from year 1, year 2, year 3, your equity, the more money you're making, the bigger your equity is. And then when you pull money out of your business, then it decreases the equity. So it's really a financial snapshot of where you are exactly at that date.
What is a profit and loss statement?
So a profit and loss statement is one of the main financial statements that every business needs. It gives you a range of time that you can see all your income, all your expenses, and it's categorized in such a way that a business can take a look at it and see if they're profitable for the year and pick out certain key metrics that they can say, what are my cost of goods sold, what's my profit margin, and ultimately what's the bottom line. P&L, as what they say, is one of the most important tools for any business owner.
See, I came in the game without a dime or a chain.